What's up? What's up? I'm gonna give everybody a second to get in here. I know there's some people that were already joined and stuff, but and on YouTube, but I just want to make sure that I give everybody a chance to get in. I know there's some people. Oh, I'm sleepy today. I don't know why. It's Friday night. I'm like an old man. Bitcoin's kind of just been moving. It's not really been coming down and mitigating some of these zones, which is not necessarily like I still have interest in this zone down here, but it's not really healthy movement to the upside, which kind of I mean, yeah, it's great, but I don't like the way that we're just moving, leaving tons of inefficiencies. What that tells me for is that we're just hunting liquidity, and then we'll see a pretty hard down move. Not necessarily changing any bias, of course, on a higher time frame, but and this is kind of getting more and more normal with crypto. It's just not really. It's leaving tons of inefficiencies along the way on lower time frames, which usually those will come back down and get filled. And whenever we're um, starting to pump, for instance, like over here, this is what you want to see. We come down, fill the inefficiency, and then continue. Once you start to see this kind of movement, we get this. We get the same thing on the way down. So what I'm looking for here, and you guys know I don't really trade on the weekends too much. Um, I want this 15-minute zone down here to get mitigated, but the problem with that is the 4 hour internal structure is pretty tight. Like it's not really giving much room for any kind of retracement and to fill any of these gaps. Like once we come down and change that, the 4 hours switching bearish again, and we really want to see a more of a healthy trend, in my opinion, on the way up. It's going into the weekend too. You're going to see price action move a little weird. That's whenever we usually see some pretty volatile moves. But we came up. This was our initial 4 hour change of character. Price came back down into this zone, launched off, literally never came back down and mitigated anything. Not really. And if you use a 4 hour zone for entry down here, or if you're watching, we were going over yesterday, you could have watched the 5 minute and everything changed really fast, right? There was somewhat of a mitigation here and pushed up. I really wanted us to come down and fill these areas of demand because price is just leaving a lot of voids. The main zone that I have my eye on is going to be this. Oops, I went to the low time frame. Is going to be this zone right here at 2308, and that's on the perps chart. I had marked this earlier today. I wanted to take longs from this zone, but again, it's just really fickle price action here because you have this last order block, price comes down, front runs it. I'll monitor price here if I'm up and on the computer or around it. I've got my daughter this weekend, so I probably won't be trading too active. But you could watch this zone as well because we got this low right here, front running it. See if why is my mouse loading? Okay, there we go. Got that low front running this zone right here that never got mitigated and a little fair value gap there. It's a different. But that would be the main point of interest I would keep an eye on if you're looking to maybe scalp something for today. But overall, where I see the value is going to be under the sell side liquidity at around 20,308 down into the bottom of this wick. If you break that, next up would be down in this area. But overall, not a very healthy up move, in my opinion. What it seems like is we're just hunting liquidity, which that's good in the sense that it'll push us to the upside. But it's not really displaying um, a healthy trend. We're coming down and quickly mitigating orders. Usually what happens when you see that is price will push up and then it'll fall just as equally as hard. But we'll monitor that more. Kind of review some of the price action on indices. So those of you who are in the Discord and got the draw on liquidity class, you guys will see exactly what I'm talking about if you paid attention and have been studying. So look what happened with this swing high form here. And what did I tell you guys? As soon as we form that, and I don't mean swing structure, because here's our swing high, here's our swing low from a swing structure standpoint. But when we are looking at candle structure, we're looking for a simple 4 candle pattern where we have one candle with a high and then one to the left of it. If we're talking about highs, one to the left of it with a lower high and then 2 lower highs consecutively, right? So when that happens, price is gonna rush towards the next draw on liquidity, whether it's a fair value gap, like right here, rush into it and then started to reverse, right? And then we came up. Where did we go next? Fair value gap. Where did we go after that? Because we had no fair value gap to fill here. So once you have no fair value gap, you're going to go for lows. What happened? I was looking back at this, and I really wanted Bitcoin to hold a demand zone in here, but now I see that SPY or SPX, these were hunting lows. So you're going to see Bitcoin kind of just stumble along the path with the S&P a lot of the time, especially with big movements like that. So I think that's what caused the volatility in Bitcoin. Is SPY was just on its course. So we came down, took out the lows, and now we haven't really formed it because remember we need another candle to higher low than this one. After that, I'm looking for these highs right here at a minimum, if not these highs. In the weekly draw on liquidity, which we still haven't really, we've got a clean little bit of a pattern here. So we got a candle right here. We had 2 candles right after it. So we have got that weekly swing low. That would lean us to look for the weekly draw on liquidity, which this can be a much more choppy path since it's a weekly chart. Each one of these candles is 7 days. There's going to be a lot of up and down movement, and you could still close up. For instance, last week we closed up, and last week was pretty volatile throughout the days. If you're looking at just like a 4-hour chart, a lot of people got paid off shorts here, but at the end of the day, the week ended up closing up. Big push coming into close today, which is that's always a bullish sign. We're still in this supply zone. So far, this just seems like supply exhaustion, right? But this is a pretty valid zone, sweep zone that obviously caused a huge break of structure, and it was front ran by this low. So we've swept some liquidity, and then now we're kind of hovering around this zone. We really need to get above this. If we get above this, I mean, I'm looking for the highs, no question. So coming into next week, you always want to develop your bias going into the week. Those of you who trade Bitcoin over the weekend, that's a little different. You're going to see price action move because we all know, crypto's 24/7. But with equity markets and forex, you're going to want to establish your bias coming into the next week. You know, on the weekend a lot of the time. So I'm going to be coming into next week pretty bullish for S&P. I'll be looking for probably a flush to the downside to take out some liquidity, but overall, our bias will be to accumulate longs whenever the daily candle is lower than it opened. So, for instance, we open on Monday, price rushes down here. Everybody's gonna be bearish. What's price doing? It's just coming down here and swooping all this liquidity up. Let's just say we make a big push, right? Everybody's gonna try to go short here. We know what happens then, right? Price starts to push up. So going into next week for indices, I'm pretty bullish. We'll look for those big liquidity rates to position ourselves. For Bitcoin, my strategy here, because we've established our daily bias, and really the target is going to be this high up here. It's the main, any trades I would be getting in, that would be the final target. I mean, I'd take most of the trade off before then, but this is really our draw on liquidity at this point. Also following daily structure. Um, um, we do have this fair value gap. That's right, actually. No, this would be our draw on liquidity. I apologize. But we have this daily structure. Yes, okay, well, we are bearish. This is our swing range. But, once we get a change of character, especially followed by another, you want to look for a daily pullback to ensue. So, and if we're going to pull back, we look for it to pull back into a premium, which premium is, let's see, 25K. So we want to look for a pullback at least to that level. Although I wouldn't just open along and hold all the way there. Your objective as a trader is to develop a bias, and all the noobs, and no offense, I don't mean to sound like a dick, but all the people that are new to trading, they just like, oh, buy here and hold till there. Well, let's just look at what that would look like. Okay, if you're just gonna say I'm gonna buy here, where's your stop loss gonna be? I don't know, under the major low. What are you gonna hold to 25K? Make one R, right? So it's not about catching the bottom and holding all the way up. And while that's pretty to flex, and a lot of traders do that, the the best way to utilize this information is to establish a bias and look intraday, um, for a good entry, and then kind of take, get in, get out on the way up there. Because at the end of the day, you're playing a pullback where bearish is absolute fuck on a macro perspective, right? Um, Now I know we've gone over it in the macro video, and I've talked about it on Twitter. I do think we're going to see a pullback up to like around 26K in this fair value gap, but I'm not going to trade the same as if I were trading with the trend. I think everybody should have a little bit different of a trade management approach whenever you're going against the odds, so to speak, when you're going against the trend, right? Because we know that, you know, when we're trending and we're looking to get in a position, um, we're going to look to try to get at these higher or these lower highs and just target the week low, right? But when we're trading a pullback, you know, we're going to see much more of a choppy movement to the upside. It's not going to just be a straight up move. Sorry, I'm over here. My cat's over here. Can't tell if he's like has a hairball or what. Sorry, guys. But so when we're playing this counter trend movement and all this over here, we're not going to look to just try to catch along right here and hold all the way up to where we think we're going to pull back to. Let's just say, our demand zone's over here. What the hell is this cat doing? Can't tell if he's good or not. It's acting like he got a hairball. Sorry, guys, but all right, buddy. But we want to catch, intraday moves and get good entries, and we want to take, maybe take along here, take off at the high here, because what's going to happen if you just try to hold to Valhalla? You're going to come down here. Most people are going to sell on the way down, only to watch it go up without them. You want to get in on the intraday movements. The value in developing a daily bias does not come from YOLOing into a position and just holding it till we get to whatever target you have. That's kind of a beginner approach, in my opinion. What you want to do is find entries and then ride them up to, main liquidity targets. Like for instance here, say if I was looking to long Bitcoin from this zone earlier, right? But we moved away from it quite abruptly, right? I was right when we broke structure here, and I can break this down for why I want to do this. Whenever I establish, we're against the 4-hour trend, we're against the daily trend, we're basically against any trend of substance on a higher time frame. I'm not going to not trade until we're only trading with the 4-hour trend and just wait till we get up here to short. Nothing wrong with that. But let's just say I believe we're going to come up to this POI, right? This is what I refined. That you see this box is refined from this candle, and we have the draw on liquidity right here. If I believe that price is going to this area, I'll just trade the M15 up to it. So if I come into the day and I identify what our swing structure is, like for instance, before it was this right here, I was looking in this zone right here, right? Because we would want price to come back down into a, here, put that backwards, back down into a premium. In a healthy trend, you want price to come back down into a or I'm sorry, saying it backwards, I don't mean to confuse you guys, but coming into a discount and mitigate these demand zones, right? If you want, because here's the thing, what's going on in these zones is the algorithms are creating sellers, they're inducing sellers so that they can buy more positions to break structure. So this is a what you call a flip zone. Again, this is something we've gone over in the classes, private classes, but we have supply over here in these wicks. We know that there was supply here, and the reason we know that is because there was a break of structure. So we know that if there's ever a break of structure, there was supply that caused it. So we can mark the whole range, you can mark the wick, you can refine it in all these different ways. We don't really need to refine here because we're not using it to trade. We just know there's supply here, right? So we see price came up, reacted to it, didn't get a closure above it, right? Pipped the highs, but we see price reacted to it and shot down, and then more orders were injected into the market to push us through. So what's happening here is smart money is going to create sellers so they have somebody to buy from, because they're not like you and I where you can just um, push buy. There has to be enough sellers for the size position they want that is necessary to um, carry out something like this right here at the break of structure. So they create sellers by selling. So they induce fear into the market. So what happens here on this big down move? They're buying, right? So what causes markets to expand like this is just a simple inefficiency between supply and demand. So let's just say price is in a range and it's just bouncing around, right? It's just, and now on that 15-minute candle, right? Just this little box on a 1 minute, that's a range, right? On a 1 minute, this is a range. On a 15-second, it's going to be a range. I know this sounds ridiculous, but the formula that we're using here is applicable across different time frames. You don't have to just look at it. Everybody just looks at it like, oh, what range is that? We just have a daily range or this and that, and maybe that's what we use to trade. But whenever price delivery is determining where price needs to go in order to satisfy orders and reach equilibrium, reach a happy place where there's a balance, it's going to account for, okay, how many orders are there on the sell side and how many orders are there on the buy side here. And whenever there's an inefficiency, it's going to expand to where there's not an inefficiency. So that's what causes what you call a pump or a dump. So smart money, once they push down and they come and they liquidate or induce shorts or liquidate people other long, scare people, where it just creates selling. There's just selling here. So retail selling, smart money buys it up in that down candle, and then once all of the selling interest has been removed from the market and smart money has injected buy orders, right? They're basically injecting a ton of buys all through here. The algorithms are. It's not a person. They're trading in very in and out positions or just injecting, spamming orders into the market. And while some of them got filled, some didn't. And then we also have the shorts that they have open in these areas. So, because they're selling here. So now what happens? Now they're net long. So most of their positions are long and they're in the green all the way up through here, right? So price is kind of doing its thing. So then what? Why do we use this zone over here? Well, look, they've got a ton of cells. That the only reason they even use these cells, it was never to profit off them. It was to basically um, create an opportunity for them to buy. So we're expecting when price comes down to these areas, right, into this demand zone, we call it demand, right, because they span a lot of orders that we're expecting to get filled, and they have these sell orders that need to get mitigated. That's why you hear the term mitigation. So then price is coming down into this area, and how do we confirm that? Now you can just set an order here, just go long, stop loss under, maybe wherever you put it, under the mitigation zone's good, under a recent low, whatever strategy you have. But we know that, you could just set orders there. But what we can do to ensure a little more of a higher strike rate and refine our risk to reward is we can wait for price to come into this zone and get breaks of structure. Then you've got a new demand zone, and this same occurrence is happening throughout all time frames, whether it's a 5 day, 4 day, whatever you want to call it. Price isn't, it doesn't necessarily know time. Like, institutions are not looking at a 4 hour chart and saying like, yeah, bullish swing structure. No, that's not how it works. They're seeking liquidity, so, or creating it. So once price and once the algorithms have cleared, they've cleared all the selling interest out of the market and they inject buys, price is going to expand. So that's why we look to long off of demand zones, and that's why we call them demand zones. Order blocks is another word for it. Whatever call it, that's basically the same thing. I will say with demand zones, order blocks your last candle, but we all know. So, like for instance, a lot of people would say this is a demand zone because you use the whole internal range. Now, I don't really do this. Now, you can see in this example it worked, but I've found a lot of inconsistency here because yes, it worked here, but a lot of times price will do this, and then it'll come down because you have these inefficiencies, this fair value gap right here, and price will give you your trigger break of structure, and then it'll just come down to the real area, and that's no fun. That happens a lot. So I don't really use ranges that much unless I'm on a very low time frame. But in this instance, let's look. Okay, 15-minute range here. Well, on a 1 hour, it's gonna be order block perfectly. So there's no right time frame or um, you know uh, like yes, this 1 hour order block's mitigated, but this 15-minute is not. Now I've found, and you can even go further and say, okay, well on this last down move, where did the action really begin? You could even refine it if you wanted down to this last candle, called an institutional candle. Now some argue not to do that. I found that if there's a really big difference, like for instance, if this candle right here was way up here, I would refine it. But when they're this close, I kind of just use the last down candle. The 15-minute almost always gets mitigated. Like you'll see the 1 hour, the 4 hour get reacted to, and you'll get a light reaction. Then it comes up and rushes and rushes on that liquid. Like for instance, let's just look back at some examples. So let's just go right this last can before the down move because this is a valid supply zone. So let's just see. Price obviously reacted to it here, right? So now let's go back. I like to go from a 4 hour to a 1 hour, then a 15-minute. So let's go and refine it. And you can see really quickly how much smaller of a zone you'll get. So you can refine it and say maybe there's a couple zones here. Maybe it's this zone. You could maybe say it's this up here. You could combine them all together. Whatever. You could say maybe this zone down here hadn't been tapped. You can kind of break it up. Now, then you look, okay, well, it's probably not that zone because that's what whenever you're looking at that 4 hour and we had this whole zone drawn, this is what you're seeing actually be mitigated. So everybody leads to believe, okay, all the supply is mitigated. Just not the case. That's why I try to teach people to look at this from a practical perspective and not be so technical and not say, oh, well, Casper, that 4 hour order box mitigated. It's not a good zone anymore. Notice that this didn't even happen in that candle. You're just using this as a gauge to plot this zone. So you kind of want to look at it from a more practical standpoint. And look what happened. Price came up and did tap into that 15-minute zone or 1 hour zone. Probably refine it to a 15-minute as well. And my tip here would be to look at the zones where price really saw displacement after. So two stand out here to me. I'd say this, and I'd say this right here. So I want to see if this is where it bounced off of, and we didn't. So we haven't tapped into these zones. See, that's why I like to refine stuff because on the 1 hour we did tap into the zone. If we go back, we can just draw it on that whole last candle. But oftentimes you're going to see that we'll end up coming into this area, right? We might get a reaction, we might not, especially whenever you get a high that front runs it. So, like this zone down here, the reason I like it is that exact logic is that price really didn't mitigate all the orders here. This is where the buying, the selling stopped, the buying began. The price never came down. But what did happen was inducement, right? Which is just these nice clean lows right above your zone. To me, that's just like it makes a zone more valuable. It's like if you have a car that you kept in a garage all its life or something, that zone is just more valuable to me. Now, that doesn't mean I'll just YOLO from it, but it does mean that I will pay it more attention than, maybe a zone like this down here, right? So with Bitcoin, uh, you know, overall, I really would like to see us come back down into here before we come up and tap in these areas. Because while this reaction is super nice, it's strong, it's not healthy because we're not mitigating. So if the market maker, you got to think about it from like a market maker perspective. If a market maker is doing this and they are just having these sell orders, sit and they're pushing price far away from it, well, what do you think? Why do you think they're okay to do that? Because they're going to tank everything. Now, maybe they tank it back down to this. Who knows, right? But my point is, if you want to see a healthy trend, you want to see kind of like what we saw more so down in this area where it happens extremely fast. All right, we went over on stream yesterday. We came down, mitigated a zone, swept lows, came up, introduced new demand, respected the demand, and then in this time frame, you saw that low time frame accumulation. Or in this, I said this time frame, this zone, right? Kind of wish I would have been watching Bitcoin this morning. I was trading, or not this morning, but the morning this occurred, which was yesterday. I was trading indices. So it was a crazy day in the stock market as well, but this was a pretty nice setup. I can't even say I would have taken it because at the end of the day, like I would have looked at this like, yeah, we got to break a structure, but it's like, where is your demand a wick? I don't really use the fractal demand that much. So it's an interesting little price model, but definitely one for like the case study. I actually put a picture of it in my Notion. But yeah, so for Bitcoin at this point, I'm watching this zone. Let me look at ETH. ETH on the other hand, did ETH actually? Oh my god, ETH came up to the fucking highs. Wow, that's crazy. I did not realize the ETH moved like that today. I mean, I knew it moved, but I haven't really looked at charts much. Hmm. This looks like potential little. Oops. Saw an alert up here. Hold on one second. What's up, baby? My daughter's in here. Your red towel, the watermelon towel. It's in there. I remember Daddy's working in case it's really important. Can you? No, baby. You got it's. You know where it's at. Okay. I love you. Sorry, guys. You haven't been looking for. Hold on, let me help her with this towel so she won't have my head on a stick. You know where it's at, baby. Hey guys, towel has been secured. I was literally like sitting right in front of her. But so what I was saying about ETH is we've came up above this 4-hour structure and broke down the 15-minute. It's not really pulling back into this zone. It's kind of just going. That's again like fucking crypto, bro. We'll see how I'll set alert for it though, because for me, there's like the trigger for your idea, but it really never came back up into the zone. You could have used this whole zone right here, I guess, to be fair, and then waited for a 5-minute to change bearish. So I'm gonna mark a couple zones because let's see. So that would have been 5-minute change of character up here. The flip zone would have been right here. It's kind of just jumping the gun though. Like I wouldn't have done it this way probably if I'd have been watching this live. It's bleeding though. Shit, drop my damn headphone. Yeah, if this returns up to that 15-minute zone, I'll refine this. I would look for a sell if it does before it moves too far away, but it's not looking like it wants that. No, I won't watch that zone. Because usually what I'd want to see is price to come down, tip this right here or pip that. Ideally see a closure, but if you move down with volume like this, I'd consider that change of character on a 15-minute, and then see price return back up into this zone, and then see the 5-minute go bearish and the 1-minute go bearish. And that's kind of the reason, like, I haven't really been paying as much attention to cryptos because it's just moving really like sloppy. There's entries if you trade like a higher time frame, but I found the indices are moving a little bit cleaner. Like Nas and stuff's been given nice entries today. Bitcoin's definitely holding up better than Ethereum is, that's for sure. Maybe we'll see Tokyo dump. I'll mark an alert for this zone as well. Fan of playing zones that efficiencies above them, but if we could get the 5-minute to return here and then go bearish, and then the 1-minute, I'd look for sells. Or even really the 5-minute. I've actually considered not even using less than a 5-minute for crypto because I think it's just so time consuming for the amount of entries you get because you get this kind of stuff happening. It's almost better to just trade like a 15-minute or a 5-minute at the least because you end up spending so much time on the charts for it to not give you that 1-minute confirmation. Yeah, I feel this different watch list. Seems like all cryptos are going to provide nice little short setups here if they can return to their areas. So, I gotta fuck with Sol there. I actually like this price action here. I want to see what the risk reward would look like. Just trade the 5-minute with this one. It's probably gonna pip that. I actually would take it down. Let me look at the 4 hour and see what the inefficiencies are. Probably just take it out of that first zone. The first take profit on this gets hit though, before it hits the zone, I'd cancel it. Somebody said show the cat on Discord. I just now saw that. And the ETH is gonna be nice though if that retraces a little bit. Because I've seen a lot of times like this will happen, and then you get these entries right here, and they move really fast, but then price will come back up to this institutional candle, the one before the initial impulsive move. A lot of the time, like you could even maybe refine it higher, but I'll just leave the 15. I'll set that alert, and then I'll watch this zone. I don't think I'll probably take a trade from it. I just don't like how far down in the range it is. Especially when I'm looking at it like it's not swing structure, but I look at it from like the impulsive move. Like say if we just reverse up here, I've seen zones like this work for sure, but I don't want to play something that's not in a premium of the impulse swing. Um, I just can't make myself do it. But I will watch price of this area just to kind of study it and see how it moves. Because if anything, this would be a flip zone on the lower time frames because you came down to this demand in this wick, kind of reacted to it here, and then that's where it failed. So those zones can be high value, but I prefer them to be in a premium of the range. Also, somebody requested euro dollar. What's up, MILF? Full port shorts. People that don't know that his name is MILF in Discord are like, what did he just say? Can't remember which feed I have. Euro dollar. So yeah, this is why I was I had a good friend ask me if they wanted to short this last time. I was like, no, sir, do not. But let's look at this paired up with DXY. All right, I'm gonna do it top over. Let's go to a 1 hour on both charts. I want to see, there's no divergence really here, but I want to show you guys where there was divergence at some point. Let's say it was, yeah, right here. So this is something we went over, another thing we went over in the private classes. Whenever you see, for those who don't know, DXY is just the dollar index, like the US dollar strength. So you can use it paired with assets that are, against it, anything with USD at the end of it, like Euro USD, Bitcoin, yes, and Tether counts, or the stock market, anything that has any high amount of money. Now, you don't want to go use this strategy on like Elon and you Moon coin, but you can use it on any market that has institutional involvement. So you want to see a correlation here. Like for instance, right here, if you notice, um, euro dollar started to make lower lows here, mainly this one here. I'm going to focus on this one that'll make it pretty clear. So see how we made a lower low right there. Now this isn't swing structure, it's just internal structure. We just made a lower swing, a pivot point. So if you notice at that same exact time, you can see cursors on both screens. So look, right here is about the same time down into here. You shouldn't see that. So what that tells you, if the dollar is falling and euro is also falling, that is, now some people will just use the highs. Like for instance, they'll say, just the highs, and you can still see that there was a slight divergence here. Yeah, this made a much higher high, while this also made a higher high. So any kind of divergence like that, you don't. What that tells you is that smart money is either accumulating or distributing the asset. So if you see a divergence from the assets highs and lows against the dollar index, you can say that the reason you're seeing that divergence is because this is just a liquidity raid. So if we can look, what happened? Price starts rallying on euro dollar. So we have that divergence that says, okay, well, this is the euro versus the US dollar. There's a shitload of money pumped through that every day. So if the dollar is showing signs of weakness and this is also showing signs of weakness, you can say that this asset's being accumulated and this sign of weakness is actually just a liquidity hunt, and it's stopping out institutions or large scale traders in order to take their liquidity to go long. So just want to start off with that. Now, looking at our monthly price delivery with euro dollar, we want to look at the most recent order block, going with this trend, which we're obviously bearish. So that's going to be your most recent bearish order block. So we want to look left for the most recent order block that has a high that's lower than this candle's low. So if we look, it's just in the last down candle that you through, like this got traded through. It hasn't been mitigated either, right? Price, as soon as it traded through it, we didn't really see a full mitigation of it. Do a pink line here as well. So came very close to the bottom of this range. So this is going to be your monthly price delivery range, where we're between those two order blocks. So now we know that institutions entered the market heavily in this area. So we're going to use this as kind of a range that hasn't really been formed yet by structure, but we know that this is the two levels of monthly price delivery that we're sitting between. So with that being said, we also know that we're extremely bearish on a daily time frame. We got to break a structure right here, swing structure being this. So at some point we're expecting a pullback after this break of structure. Now, how can we tell when that pullback's going to happen? When we get a daily change of character, right? We're down at these levels. We could see one more flush out even. I'm not opposed to that. But overall, um, you know, there's a lot of stuff going on with the European Union with their energy crisis. So that's definitely played a part in this. But a lot, I mean, call me crazy. I know You're like, "Well, that doesn't make sense." I'm not saying that the fucking energy crisis is, to dump the euro USD pair, but I am saying the institutions are going to take advantage of that. Promise you. So, if we know that, a lot of larger scale institutions, knew this was going to happen, right? This has not been something. It's just something that's new to you and I, or new to some people because they, get their news off of television. These institutions that are heavily involved with, billions and billions and billions of dollars in these markets, they know when these kind of things are going to happen before they happen. It's not like the energy crisis was just overnight. As soon as the sanctions were imposed, that was just on the way. Just, and more to it. But anyways, everybody, and all institutions that were long on this, most of them are probably liquidated at this point on those positions. They're out of those positions. So we're looking for price to kind of give us show us that it wants to go higher. The way it's going to do that is if this daily internal structure breaks. Now, if that breaks, that's also our 4-hour swing structure, and then we can look to bid long. It's the same thing that's happened on Bitcoin and a lot of pairs that are denominated by the dollar. So hasn't happened yet, but what we would look for is price to, bust through here, come back down, mitigate this zone. We can refine that obviously, and then start to move to the upside back into that premium of that daily range, which is all the way up here. Maybe it's all the way up to this area. I don't know, right? Again, it's kind of like Bitcoin. We're not going to try to YOLO it all the way up there, but we can develop a bias that price is going to return at least to fill some of these gaps, and then catch the intraday movements on the way up. Now, we already got a daily, or not, I'm sorry, not a daily, a 4-hour change of character right here, right? Because we came down. We were already in a bearish trend, so when we're coming down, we hit a high right here, came down, took the low. Each candle took each other's low. We didn't right here, so this became a new high. That was taken, but short-lived as we got this huge liquidity raid on CPI day and inflation day. So when that happens, we push down. Now we have a new structure, right? This is going to be our most recent high. You could even be a little more picky and say this as if you'd like, but I'm going to be more aggressive with it. I wonder if this is an inside bar. No, it's not. But we can look at that as our most recent high. And then price, we can mark this entire zone, which we know that that's um, not how I do things, but you could say that there was demand in that area. Then you can move it to the last down candle. And this is where refining really comes in. So now look what you have. Now, people say, oh, it's just a 4-hour order block. You don't want to play off that. I'm not playing, or I'm sorry, people are going to say it's just a 15-minute order block and that you don't want to play off that. But in reality, it's not. It's refined from a 4-hour or a daily order block. So I'm going to look at this zone pretty heavily if we can get above this high up here. I'll still look at it heavily, even if price comes down, from where we're at now. But for me, for forex, I'm not forcing much, especially with fucking USD denominated pairs, because everything is just insane right now. I think DXY is definitely due for a pullback, and it's in the zone that it we could expect that. But you know, we want to wait. We don't want to try to predict. So I think right now, crypto is starting to gain some strength. If we can come down and show some healthy mitigation and then bullish structure, I will look to bid long and play those longs up. The AVAX short, I like the setup. It's not, you saw the target, it's not holding it to the pits. But overall, I want to look for areas to catch longs on the majors like Bitcoin, Ethereum, um, Solana, BNB, stuff like that. But I think it needs some more time to develop. Indices going into next week, this is where I really think your focus should be. I think that if you're focusing solely on anything else, in my personal opinion, you're kind of wasting your time. As far as the thing that I really like about indices is the time efficiency. You come into the morning, you map your day out around 8:30 New York time, and by 11 a.m., you most of the time you're going to be in a trade. I mean, obviously every day is not perfect. I don't mean to paint it out like some yellow brick road, but the good days you usually get in a trade before noon, and you ride that trade for the day. And there's the most money is being moved through these markets right now because when we're in these uncertain times, large funds are cycling a lot of money. We just delivered the second quarter's futures contracts for ES and NQ. There's a ton of money being moved around right now. So when there's a ton of money being moved around, that's when you're gonna get volatility. And you can see that price is respecting these. Like, let's look at this. This is a great example of how we were talking about price. Um, kind of not. It wasn't mitigating demand zones before. Now we can see it kind of danced around on this one. It barely tapped into it. Look, people thought this was mitigated. People thought this right here. So what was happening? All of this was just inducement, right? People thought that this. Why won't it click? There we go. People just thought these were the lows. Look what price came over and did. Tapped them out and then starts to move. That's the kind of healthy price action you want to see. That's why I want to wait for Bitcoin to come down and on a much smaller scale do the same sort of price action. But I'm going to wait till we get there and then trade, the 5 minute to give me this kind of pattern. Look for that 5 minute order block. I probably won't even play the 1 minute at this point. I'll just play the 5 minute. I don't want to waste too much time on crypto like that because and when I say it, I don't mean it sounding like a negative way, but you're more time effective to trade, in my opinion, my experience with a 5 minute, like 15 minute to 5 minute confirmation. The 1 minute confirmation is cool, and when you hit it, it's fucking awesome. But I think that you can spend the time that you would spend doing that on other markets. What's up, baby? How you doing? It matches. Wow. I like it. You want to say hi to everybody on YouTube?
Hi.
No, she's running away.
Hello,
What's up, baby?
Casper Jr.
You spill something? You said there's something wet on the floor. And I said, did you spill something? She said, no. Wait, actually, it might be the kid. Did Dale throw up? You guys hear my girlfriend's cat's name is Dale? How do you guys like that? Isn't that funny? Okay, don't touch it. Okay.
Dale Earnhardt Jr., bruh.
Yeah, right. That's literally she didn't know what to name him. I wasn't with her
Still
when she got
fast
him.
as fuck.
Yeah, bro, his name's Dale. Like I remember the first time I was at her house, I was like, "What's his name?" She started laughing, and I was like, "What?" She's like, "What's his name?" And I was like, I asked, "What's his name?" And she said, "You're gonna laugh," and I was like, "I won't laugh." She's like, "His name's Dale," and I started fucking immediately laughing. He's a good cat though. He's like a dog, bro. This cat's chill. I'm not even a big cat person, but also here, looking at this, the more I see there's a shitload of trendline liquidity here. Kind of just threw it, but that rhymed. But a lot of trendline liquidity building up like right there, which that would be awesome. We could run that. Everybody's want to go short, and look to bid longs up to. I really hope we preserve these kind of highs here, and then also preserve this drawn liquidity. That would be great. But on that note, guys, I'm gonna hop off. I know it's not a full hour, but it's Friday night, little one. Not much more for me to go over. Yeah, I appreciate it. Tonight's Friday. I just realized how many people are in here. There's usually not this many people on Friday, so I appreciate you guys pulling up. Hope you guys have a great weekend. I think we got a super fucking fun week ahead of us, so I'm looking forward to this coming week trading for sure. So until tomorrow, I will. For those of you in the Discord, we're going to do our class tomorrow. I'll announce the topic and all the stuff we're going to be going over later tonight. And for everybody else, I'll see you guys on Monday. Peace out. I appreciate it.